Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Friday, 6/26/2026. Nailed it. And in today's video, I'll be breaking down everything that you need to know ahead of today's US session. Let's get into it. There are two main themes I want to hit on today. The first one is the continued calmness toward the oil market. This comes despite concerns about the Strait of Hormuz. Yet again, yesterday, the IRGC fired on a Singapore flagged cargo ship. That's something that prompted the UN to pause its evacuation from the Strait of Hormuz. And again, just raises concerns of Iran's control of that critical waterway. That said, markets are mostly taking it in stride. Oil's falling 3% today, and it's actually down 9% on the week. In other markets, we see the US dollar edging lower and the NASDAQ 100 trading down by about 1% ahead of the US Open. That is our second major storyline, the ongoing, I don't want to call it a tech wreck yet necessarily, but certainly the ongoing weakness that we're seeing in some of the major hyperscalers. This move actually accelerated on the back of Micron's earnings on Wednesday. That's because Micron provides memory to all of these AI hyperscalers and shows no signs of slowing. It's selling its product at a relatively inflated price. And now traders are thinking to the second order there that these hyperscalers are seeing a lot of outflows. Many are turning cash flow negative, and we can see the scale of the drawdowns in some of the biggest stocks on the planet. Microsoft down 36% from its highs, Meta down 32%, Amazon down nearly 20%. The big question moving forward is whether investors are starting to demand to see some ROI on all of the AI capex that has driven so much economic growth and so much broader stock market growth over the coming days. This is a longer term narrative, but it's something we're going to continue to watch because it could have big implications for how the stock market performs in the second half of the year, and certainly something you'll want to monitor if you are trading or investing in broader stocks. Today's chart of the day is oil, just sort of putting pen to paper to underscore the weakness that we've seen in the oil market despite some of the concerns about the Strait of Hormuz. After slicing through previous support in the 76 area, oil has fallen down to the 78.6% retracement of essentially the entire war rally that we saw this year. That comes in around 69. For now, it is holding that level, but if it drops through there, we could completely erase all of the gains that we've seen since hostilities between the US and Iran broke out. This as the market focuses on a broader oversupply picture, despite the near-term restricted supply that we saw from the closure of the Strait of Hormuz. As long as that continues to normalize, perhaps oil prices may remain under pressure, and the key level again to watch is around 69 or 68.75. as we head into next week and beyond. That is today's video. Thank you for carving a couple minutes out of your day to watch today and throughout this week. If I can ask just one quick favor before you go, please do drop a like on this video. It's a great free way to show your support and keep us doing more of these videos. And I'll also flag, if you're not already, please do subscribe to our YouTube channel at FOREX.com. Thanks again, and best of luck with your trading today.